Ladies and gentlemen, welcome back to the channel. We have a hell of a video for you today. We're going to discuss CPI, why the S&P's up 1%, Russell's up 2.5%, more than 2.5%. It might not be obvious for a lot of you, for most of investors, okay? But it's critical that we understand this, okay? So we'll get into that here in this video. We have a lot of different comments from Fed Schmidt, some maybe different ways we're going to get some of the BLS jobs report data. At least there's some speculation going on about that you must also know. There's some, Trump comments, Zelensky comments today, and I want to provide a little bit of clarity on that, specifically heading into Friday's meeting between Trump and Putin. So we have a lot to get into here in this video. I don't want to waste your time. Hit that like button, subscribe to the channel, check out the link down below in the description of this video for the trading community. If you have not done so already, we're going out finding small cap AI stocks before Wall Street does, before everyone else knows about them. We're going out and making these investments. Companies that are growing more than something like BBAI or, SoundHound, something like that, just to pick on those two. We have companies that are growing faster, that are nearly profitable, that have great balance sheets, high insider ownership, but are trading at a third of the valuation. That is what I view as an opportunity. And it's only a matter of time before that valuation corrects to the upside, in my view. And I think some of the stocks we're investing in are actually going to have a very good August, specifically once they report earnings. So check it out, link down below in the description of this video if you have not done so already, and on to today's episode. Let's get into your broader market news today that is causing the Russell to go up well over 2%, that is causing, oh my gosh, this cat is a freaking psychopath, that is causing the S&P to go up almost 1% as well. This cat just ran, literally clawed up my leg to climb onto me. Jeez. We're just going to keep that in the video. That really sucked. Okay. But there's a lot of news we need to discuss. The big news today, though, was really CPI. Okay. So for core month over month, we came in at 0.3%. in line with expectations. Last month was 0.2%, but we were expecting things to rise a little bit. Now, core year over year came in at 3.1%, a little bit higher than the 3% number that was expected. In headline inflation month over month came in at 0.2%, which was about in line with expectations. And the year over year headline number came in at 2.7%. That was better than the expected 2.8%. So in my view, it was kind of a weird inflation report, but there's always the decimal, okay? You got to pay attention to the decimal. Core prices in CPI rose 0.32% in July. So month over month actually came in at 0.32%, the second largest month over month increase this year. Core CPI is up 3.1% over the last 12 months. The 3-month annualized rate was 2.8%, and the 6-month annualized rate was 2.4%. So you can see here, the 6-month annualized rate is actually coming down to now the lowest point you have been at since really the inflation problem started to begin with, right? The 3-month annualized rate has went up a fair bit, and the 12-month annualized rate is starting to come up as well, really back to where you were right around the election, okay? So there's definitely some positives to point out here and some negatives. I think the big positive, though, is, as we talked about yesterday, okay? This was kind of almost exactly in line with the expected numbers from major Wall Street banks. Okay. Some firms, even like Namura, were at 0.34%. TD Securities at 0.33%. UBS at 0.35%. You know, PNB Paribas at 0.32%. Okay. Goldman Sachs 0.33%. Again, JP Morgan at 0.34%. Like, a lot of firms were expecting a hotter report than we got today. Okay. So it was better than expected based on some firms' projections. Was it great? No, but it wasn't terrible at the same time. Now, also, what a lot of people are pointing out today with the CPI report is that a lot of the inflation rise took place in services today. And I think this is why the Russell is going up so much today, because what we've seen in the last report and what we heard on the Fed conference, you know, what Jerome Powell was saying is, hey, we're starting to see a little bit of inflation impacts from tariffs, because look at goods inflation. Goods inflation is starting to go up. Okay. What happened in today's report was goods inflation actually came down a lot. It was only like 0.22% on a, month over month basis. So that extra, addition to inflation was not from tariffs. It was in the service sector, which is, and really has been the problem for many years. So this CPI report shows that it's not really tariffs that, shined bright in this report, if you will. It was services, which tariffs generally do not affect. Okay. So again, some good, some bad, but for people concerned about tariff inflation, you just didn't see evidence of that in today's inflation report. Okay. Now, this is moving the odds for Fed rate cuts. So yesterday, the odds of a cut in September were 83.8%. Today, they're 91.1%. So even though you came in around expectations, it is the goods, inflation not showing up that is causing the rise in rate cut expectations. Okay. October 29th, the odds of another rate cut by October 29th yesterday was 53.8%. Those odds jumped 11% today to 64.6%. The odds for December 10th to get a third cut this year yesterday were 39.8%, and the odds jumped almost 10% to 49.0%. So markets are actually favoring 3 rate cuts this year. Again, we're going to have another CPI report, another broad set of economic data between now and the Fed meeting in September. Okay, so there's definitely going to get, there's definitely going to be these odds that move around quite a bit further. But just the CPI report today showing we don't really have a tariff inflation problem is the good news. Now, Fed Schmidt today isn't exactly team rate cuts. He says, quote, "I see no possibility that the impact of tariffs on prices will be known over the next few months." Fed Schmidt says the tariffs' likely muted effect on inflation is a sign that policy is appropriately calibrated. Fed Schmidt says the tariffs' limited effect on inflation is a reason to keep policy on hold, not an opportunity to cut rates. This September meeting is going to be wild, okay? You're going to have the Fed, which might be like split. Fed Bostic might vote to pause, continue to pause. Schmidt obviously going to vote to continue to pause. Kashkari could probably go either way at this point. Bowman's going to be team rate cut. Waller's going to be team rate cut. Moran, the interim Fed governor appointed by Trump, is going to be team rate cut. Jerome Powell could probably go either way. Okay. You're going to have a very split Fed meeting in September. That is going to be really one for the history books. Not too often do you get so many people that are split on the Fed. Schmidt says, "I will modify my views if I see demand diminishing." He says, I support a patient approach on changing the Fed's policy rate. He says that retaining modestly restrictive policy stance is appropriate for the time being. And he says that tariffs seem to be having a limited effect on inflation. He says growth remains solid and inflation remains too high. And he says limited effect on inflation is a reason to keep policy on hold, not an opportunity to cut rates. USDEA's Moran says disinflationary policies are working through the system. Trump today on Truth Social said, I think that David Solomon should go out and get himself a new economist, or maybe he ought to just focus on being a DJ and not bother running a major financial institution. Trump says that tariffs have not caused inflation or any other problems for the nation. Trump says trillions of dollars are being taken in on tariffs. Trump says consumers aren't even paying these tariffs. Trump says that Goldman Sachs refused to give credit where credit is due. Moran says, I believe tariffs will be borne by the nations that we are tariffing. White House economic advisor Moran on the Fed says independence is paramount. Moran says that CPI data rarely gets revised, suggesting again the non-farm payrolls numbers are not very accurate, which I think we all know they're not very accurate, but that's a good point to make on CPI. Moran on CPI says, very happy to see inflation is well behaved. USDEA's Moran says a massive insurge of renters boosted rent prices. And he says there is no evidence of tariff-induced inflation, which again, that's why stocks are doing well today. There's not really any signs that tariffs are causing inflation. Now, Trump calls for immediate rate cuts and threatens a lawsuit against Fed Chair Powell. He criticized Powell as too late, blaming him for serious policy delays. Trump also hinted at a major lawsuit over the alleged $3 billion overspending on the Fed building renovations, which he says should have cost $50 million. He mocked former Treasury Secretary Mnuchin, accusing him of recommending Powell. Despite this, Trump said the economy is strong enough to surpass Fed leadership. Fed Barkin says spending is solid, but consumers are tired of higher prices. Fed Barkin said the fog is lifting as tax bill is passed and tariff deals are being done. Barkin says the balance of jobs and inflation risk is still unclear. Fed Barkin says if consumers draw the line, employment could take a hit. Basically, if people stop spending as much, if demand slows down, more people are going to lose their jobs. Barkin says the pullback must be more serious to cause the economy to falter. Fed Barkin says may well see pressure on inflation and unemployment. Balance between the two, again, is unclear. Nick Timmerhouse on the Fed rate decision says the bar for a rate cut changed after the July payroll report. A September rate cut could have been derailed by a hot CPI print today. The July CPI wasn't a no inflation reading, but it likely wasn't hot enough to stop a September cut. So he's basically saying, like, there was a little bit of inflation in the CPI report today, but it wasn't hot enough to stop rate cuts. China orders companies to halt NVIDIA chip orders. An order applies to ByteDance, Alibaba, and others. White House Press Secretary Leavitt says they could expand cut of China's sales to other companies. The White House says we need to look at means and methods on how we acquire this labor data, because today, the guy that is now running the BLS suggested instead of getting labor reports every 30 days, maybe it's a better idea to get really good data every 3 months or every 90 days. Now, also in the news today, Trump will participate in virtual Ukraine talks on Wednesday. But the White House says today the plan is for the BLS statistics to put out monthly reports. So the White House says they don't really plan to change that right now. White House says perhaps there are plans for Trump to travel to Russia in the future. Zelensky says Russia wants Ukraine to leave Donbass in exchange for no advance elsewhere, rejects offer, reports small Russian gains and troop moves ahead of September assault. So again, as I've talked about on this channel before, as long as Zelensky is the one holding up the war from ending, that's good for markets. Because Trump's not going to put additional tariffs on China if Zelensky is the one holding things up. If Putin's the one holding things up, well, That's obviously bad for markets because that means additional tariffs could be coming. Hopefully we understand the difference here. Bank of America's CEO Moynihan predicts U.S. economy will grow by 1 to 1.5% this year. Now we do have some earnings today and after hours as well. CoreWeave, Rigetti, Kava, H&R Block, and some others. Tomorrow, Arcos Dorados in pre-market, and after hours, Cisco, Equinox Gold, Red Robin. Thursday pre-market, JD.com, John Deere, Nice, Advanced Auto Parts, Birkenstock, and Weibo. And then Thursday and after hours, Applied Materials, New, and Gambling.com. With that said, let me know your thoughts on all of this down below in the comment section. Again, S&P hitting a new all-time high. The Russell getting back to pretty much the highs in July following today. And we're kind of bucking the trend, right? August doesn't tend to be a seasonally good month. September is really the weak month. So we'll see. Anything can kind of happen in August. It's kind of a toss-up, seasonally speaking. I think the average monthly return is like negative 0.15%. Like, it's not bad at all. Not great, but not terrible. September is negative, like, almost 1% on average. So September is going to be a little bit of the toss-up, but I do see a strong case for stocks to continue higher towards the end of this year, regardless of what happens in September. So hopefully we do get a little bit of a dip. I would love another buying opportunity, but it's not a guarantee that we get that. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. Check out that link down below in the description of this video if you have not done so already. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.